Welcome back to the Deep Dive. Today we are taking on a story that, honestly, is one of the most transformative financial innovations of the last 50 years.
It really is. We're talking about M-Pesa.
Exactly. We're going deep into its launch, how it worked, and the incredible ripple effect it had across the world. This isn't just a story about a cool mobile app.
No, not at all. It's foundational for anyone in tech, finance, really anyone interested in how innovation actually happens. We're looking at how a system solved a problem that, these huge global banks have been failing at for decades.
And they did it with basic text messages.
That's the amazing part. Our mission today is really to unpack the specific steps that led a Kenyan telecom company become, essentially, the country's core financial plumbing.
Okay, so to really get the genius of M-Pesa, we have to start with the problem it solved. Let's go back in time to Kenya before 2007.
Right.
If you lived in Nairobi, okay, maybe you had a bank. But for the other, 80% of the country, what did their financial world look like?
It was a cash world, almost entirely a cash-only economy, and a really tough one.
How so?
Well, formal banking was slow, it was expensive, and most importantly, outside of the big cities, it just didn't exist.
So if you needed to do anything with money?
It was a huge effort, and it was risky, incredibly risky.
I want to dig into that risk because that feels like the real heart of the problem they solved. How did people do something as simple as sending money home? Say you're a worker in the city and your family is 300 miles away in a small village.
The sources are so clear on this. The urgent barrier was the cash itself, just holding it, moving it.
You mean physical risk?
Physical risk, yes. You could travel, but that meant time off work and you were a target for theft. But the worst part, and this is the story that really defines that whole era, was having to rely on these informal, totally unreliable middlemen.
This is the famous bus driver scenario.
That's the one, exactly. Imagine this. You take your whole week's pay, maybe your month's pay, a thick stack of bills, you put it in an envelope, and you hand that envelope to a long-haul bus driver you've never met, and you just pray. You pray he remembers to give it to your cousin or your mother when the bus gets there, hours or even days later.
Wow. It's paralyzing.
It was. It was a bottleneck on everything. Family, business, any kind of economic progress. This wasn't just an inconvenience. This was a real barrier keeping people trapped.
Which sets the stage perfectly for the big insight. Safaricom comes along, they see this problem, and they don't say, let's build more banks.
No, that's the key. They looked for the technology that was already everywhere.
The mobile phone.
The mobile phone. Even in the most remote villages, people had phones. And we're not talking smartphones here. We're talking about the most basic feature phones,
The ones that could just make calls and send texts.
That's it. Simple SMS, no data plans, no complex apps. They realized the solution had to work with the tech that was already in people's pockets, the tech they already trusted.
So let's get into the mechanics of the innovation itself. M-Pesa. M for mobile.
And Pesa is Swahili for money.
Right. On the surface, it sounds so simple. But what they did was kind of a revolutionary hack of the entire banking system. How did they use a corner store and a text message to do what banks couldn't?
The genius was in creating a physical network to handle the cash. They built this huge distributed web of M-Pesa agents.
And these agents weren't bankers.
Not at all. They were just regular people running small businesses. A local kiosk, a little shop, a petrol station, community vendors.
So those local shops became the on-ramps and off-ramps for the whole system, the human ATMs.
Precisely. The process is called CICO, cash in, cash out. It's simple. You walk up to an agent with, say, 100 shillings.
Okay.
You give them the cash. The agent takes it, confirms the deposit on their phone, and instantly that physical money becomes digital value in your mobile wallet.
And that wallet is just tied to your SIM card, right?
Directly to your SIM.
Yeah.
And once it's digital, it can move at the speed of light.
So you just text the money to someone else's phone number.
Instantly. The recipient gets a notification right away. If they want the physical cash, they just walk to their nearest agent, show an ID, and convert that digital balance right back into paper shillings.
It's secure, it's fast.
And it's always available. It completely bypassed the need for traditional banks.
What gets me is how low they kept the barrier to entry.
Yeah.
No internet needed, no fancy smartphone. They built a billion-dollar financial platform on SMS.
And that decision was everything. SMS is cheap, it's reliable, and it works even on very weak network signals. By sticking to that low-tech foundation, they made sure it worked for the people who needed it the most.
The people at the very base of the economic pyramid.
Exactly, the ones who couldn't afford a smartphone or a data plan.
Okay, so this is where the story just goes vertical. This wasn't some slow pilot program. The numbers are staggering. Within 2 years of launching in 2007,
Hmm.
the sources say over 40% of all Kenyan adults were using M-Pesa. Today, it's over 30 million people daily.
It's an incredible growth curve.
So what are the big lessons there? Why did it explode so quickly?
You can really break it down into 4 key factors. First, and we've touched on this, was urgency.
Right.
They were solving a painful universal problem. Getting money home safely wasn't a nice to have, it was essential.
This wasn't just a better banking app, it was a lifeline.
It was a lifeline. Second was the simplicity. We just covered that. If you could send a text, you could use M-Pesa. No financial literacy courses needed.
Okay, so urgency and simplicity. What's the third?
The third factor, and you cannot overstate this one, was the agent network, the sheer density of it.
That army of local shopkeepers.
Yes. The data shows that very quickly, M-Pesa had more physical locations, more places to get cash in or out than all of the traditional banks in Kenya.
Oh, combined.
By flooding the country with CICO points, they solved the access problem everywhere. Even in the villages the banks had ignored for a century.
That agent network just completely wiped out the single biggest advantage the banks thought they had.
It did. And that brings us to the fourth element, trust. Think about it. A new company, especially a finance company, has a massive trust problem. But Safaricom was already the biggest mobile provider in the country.
People already knew them. They already paid them every month.
Exactly. They were a trusted utility. So when they launched M-Pesa, they basically transferred all of that existing credibility over to this new financial product. They didn't have to build trust from scratch.
That is such a powerful insight. You build on what people already use and trust.
It's maybe the most critical lesson from that whole adoption phase. They just repurposed the loyalty they'd already spent years building.
So let's pivot from how it grew to how it changed the country.
Yeah.
Because this thing didn't just stay a simple money transfer service. It became the financial plumbing for the entire nation.
It really did. The transformation was profound. Economically, it just uncorked the flow of capital, especially for small businesses.
How so?
Well, suddenly, a merchant in a rural market could get paid instantly. They could manage their supply chain without carrying around huge, risky wads of cash. They could reinvest faster.
It must have just supercharged the speed of local commerce.
Absolutely. And think about those family remittances we talked about. By making them instant and cheap, families suddenly had more money to spend because less was being lost to travel or fees.
And there's actual data on this, right? I mean, on poverty reduction, which is just incredible for a telecom product.
There is. Some key studies showed that M-Pesa was directly responsible for lifting about 2% of Kenyan households out of extreme poverty.
2%? That's a staggering number.
And the mechanism is so interesting. It's not just that they got more money. It's that the service made them more resilient. They could handle an emergency, a medical bill, or invest in something small, like better seeds for their farm.
It's hard to imagine any new fintech product in, say, the US or Europe having that kind of direct, measurable impact on poverty.
And socially, the impact on women was huge. Giving women access to their own secure, private mobile accounts, it gave them so much more financial independence. It really started to shift household power dynamics in a positive way.
This success story obviously didn't stay just in Kenya. The M-Pesa model became a blueprint for the world.
It absolutely did. The whole concept of mobile money exploded across the global south. Tanzania, Uganda, Ghana, all the way to India. Many of them copied the key elements directly.
The agent network.
The agent network, the focus on SMS, the CICO model, all of it.
What I find amazing is that even developed economies started studying what happened in Kenya. It kind of flips the whole script on where innovation comes from.
It really does. Global strategists, neobanks, they all looked at how this decentralized physical network of agents drove massive digital adoption. It became a template for reaching the unbanked, even in mature markets.
But no innovation on this scale happens without friction. As M-Pesa basically became a monopoly, what were the challenges they ran into?
Well, that kind of overwhelming success immediately brings up regulatory questions.
Yeah.
Domestically, you had all these concerns about Safaricom's market dominance. Is it fair for one company to control the nation's financial rails? It led to constant battles with regulators.
And the traditional banks can't have been happy.
They were furious. The initial pushback was intense. They claimed M-Pesa was illegal, that it was unregulated banking, and operationally, as it scaled, so did the risks, fraud, sophisticated SIM swap attacks. They had to constantly evolve their security.
And what happened when they tried to export the model to countries with, more established banking systems?
It was much tougher. The sources note that in places like South Africa or parts of Eastern Europe, it didn't take off in the same way.
Why not?
Because the original desperate problem M-Pesa solved just wasn't as severe. If you already have decent banking access, a new mobile money service is a convenience, not a revolution. The vacuum wasn't there.
So to stay relevant, even in Kenya, they had to evolve past just sending money.
They did. It had to become a full financial ecosystem. They started adding more sophisticated services, microloans, savings products, merchant payment systems with QR codes. It proved you can start with low-tech and build to high-tech.
That entire journey, from a simple cash transfer hack to a national financial platform, is just a perfect case study. As we wrap up, let's distill the biggest lessons from all this for anyone listening who's interested in fintech or innovation.
I think if you boil it all down, M-Pesa gives us 4 almost non-negotiable laws for successful financial innovation.
Okay, lay them out for us.
First, the best tech doesn't start with complex features. It starts by solving a simple, urgent, human problem, like the fear of handing your cash to a bus driver.
If the pain is real, the solution will spread.
Exactly. Second, adoption happens when your tech fits into how people already live. Use the tools they already have. They built for SMS phones, not for the phones they wished people had.
You adapt the tech to the user, not the other way around.
100%. The third lesson is about that non-technical piece we talked about. Trust.
Right.
Safaricom's credibility was its secret weapon. You cannot launch a financial product without that trust. It's more important than the code.
And the final one, the ultimate driver.
It's access. The core lesson is that access is what drives transformation. Getting the service to everyone through that incredible agent network was far more important than having the most advanced features. M-Pesa won on access.
What a story. The legacy of M-Pesa is such a powerful reminder that, game-changing innovation doesn't have to come from Silicon Valley.
No.
It can come from just deeply understanding the real problems of ordinary people and building something that works for them right now with what they have.
And that leaves us with a final provocative thought for you to take away from all this, and it comes right out of the M-Pesa story. The future of finance isn't going to be defined by the most advanced or complex technology. It's going to be defined by the technology that creates the greatest, most widespread human impact. And that focus on impact over complexity is the real lesson of M-Pesa.